there's so much uncertainty, and corporations, while they certainly have better information than we have, are not immune to the level of uncertainty that's out there. And I think when you think about the broader investment landscape, when you think about the economic environment, I would argue, what is Amazon supposed to do? But hey, we're seeing a slowdown in X, Y, and Z. Let's just put a pin in things. And obviously, for the last couple of years, we've added an enormous amount of employees, and that's been true across the tech space in general. So I think it's totally understandable to take a pause in hiring. But again, next week, we get a whole host of catalysts over the next couple of weeks. We have obviously 2 strong weeks of earnings. You have the jobs report. You get the Fed meeting. You have the CPI. That employment report is going to take on increased importance as the CPI starts working in the market's direction that is coming down. What exactly happens to jobs and wages with headlines like this continuously coming out?
Are the things that you just mentioned, economic reports, a Fed, too much of a hill to get over for the rally to continue, or no?
No, I don't think so. Listen, any number of people have come on TV, and you've got seasonality, which I agree with, and I've mentioned before. Obviously, the force of the decline had gotten the market not to terribly oversold levels, but technically there were reasons to argue for a bounce. And so when you put that together and then you layer on top of it the Wall Street Journal story and Mary Daly's comments that perhaps the Fed was going to do exactly what the market knew they were going to do and was already priced for, you've laid the groundwork for what might be a more sustained rally on the order. I think Aaron was in the segment before me saying 10 to 15%. That would be a perfectly normal in the larger context. But again, when these employment headlines start working their way into that monthly employment number, that's where the rubber is going to meet the road.
Let's go to Deirdre Bosa now, who has more on Amazon, which, again, Dee, is causing a less than 2% or so slide in the stock as we speak?
Right, but it's still moving. Now, we have reached out from Amazon. We haven't heard back yet. We'll certainly update you when we do. But remember, let me just put this in context, that Amazon is the #1 cloud player, some $62 billion in revenue in 2021. So this would be, a fairly big deal. When we talk about Amazon and the overhiring, the overbuild out of capacity, that relates to its logistics and e-commerce business. There hasn't really been any concerns raised about its cloud business. Yes, it has been decelerating, its growth, that is, but it has been pretty resilient, and the street has basically acted as if it is recession resilient. Of course, the results coming up this week from Microsoft, and Google, those are the 3 hyperscalers. That's going to tell us more about the state of enterprise IT spending. But Amazon, again, is the biggest player here. It is thought that maybe it could be potentially more vulnerable compared to Microsoft Azure because it serves more small and medium-sized businesses as well as startups. So this would be an indication, if this report is true, that maybe they are ramping down, and that would have ramifications, not just across Amazon, but the state of enterprise spending.
As you just said, too, just to put it in perspective, that this is the highest growth part of Amazon's business, correct?
It's the highest growth. Actually, advertising has taken that title, I believe. It has come up pretty quickly, but it certainly is one of the fastest growing businesses within Amazon. And Scott, it is the profit engine, okay? The e-commerce business does not make much of any money. It all comes from Amazon Web Services. So this is what allows Amazon to experiment in a lot of other businesses, such as streaming, such as advertising, such as logistics.
Yeah, one of the reasons, too, that investors are willing to pay such a premium multiple for a stock, in large part, it's because of businesses like this rather than the marketplace. Dee, thank you very much. That's Dee Bosa, who covers this company. If you have anything else, please pop back on. Let us know, and we'll continue to follow it. Again, Amazon shares down, looks like 1 1/3% on this report. Now, all that said about Amazon and Apple, Dan, and all these other big tech companies reporting, no disrespect to the Visas and MasterCards and Exxons and Chevrons, Chipotles and McDonald's, there are some other biggies out there that matter. You watching those?
Yeah. Well, first of all, let me just say about Amazon. If our good friend Brian Belsky was here, he might say, well, they're freezing hiring because they've reached the perfect amount of employment. And so productivity is going to be fine, and revenue generation won't be impaired, and actually margins are going to expand. So we don't know exactly what this means. We don't know that there's inherently negative connotations.
No, but you raised the issue earlier, though, of a lot of technology companies, particularly the biggest ones, that did overhiring. Yeah, right? It's the kind of thing that Gerstner's talking about in his letter to Meta.
That's right. And listen, we've seen quarter after quarter after quarter, these companies were rewarded for growing. And then obviously that equation changed, for lack of a better word, on a dime late last year and early this year. And so Amazon, in that sense, is right in line with everyone else saying, OK, let's focus on profitability instead of growth at this point, although Amazon has infinitely more growth than many of those other companies. And I'm sort of half joking about Belsky and Amazon.
I hear you. I know, only half joking, of course.